Welcome to today's meeting with our special guest, Lou Castillo, as well as Tim Fowler. Tim is the one who introduced us to Lou, and Lou to us, us to Lou. And what we are working on, for those of you that may not have noticed or came into this and you haven't been on one of our lunch and learns, we're working on several tracks of commercialization effort this year. The first one is what we've been doing in the past is we're continuing. That's our Encountering Innovation focus with the Department of Defense. That includes now McConnell Air Force Base out of Wichita, and their work, they're working to try to bring in several of the Air Force bases around the Kansas area and the surrounding states to create what they're calling the Midwest Collider event. So our first track is what we used to do, DoD centric, but we're doing that, and we're putting that in a lunch and learn for those of you that not participated on a regularly our first Friday lunch and learn, so at noon. Our second track is specific to primes, and for now that's a NASA focus. We're working, so our second track in the second Friday of the month with Rick Slater, who was just retired recently with Johnson Space Center for NASA. He's working on, we'll be launching a matchmaking event in July. We'll give you the detailed time frame coming up, not quite ready to give the date on that, probably the third or fourth week in July for 3 days is the plan. And then our third week is our funding track. And right now we're focusing on sole source contracting. Under normal circumstances, this program today, we would have presented in the lunch and learn, the third track with our funding. So when this one showed up with Tim, we were very excited. What we're here to tell you is, so I'm expressly stating this, we are not endorsing CQuence. We are offering them up. Some SBDCs probably wouldn't even do this, but we don't see this as an endorsement or a break in what we do. We're not getting paid we're not getting a commission or anything to work with Lou or Tim with Lou. What we see this as is exactly what we hope to do, and that is offer up opportunities and bring our client base to that opportunity. What we would do for Lou is, in this case, what we did do is he gave us a specific category focus, and Bill Carey was the one who went through that focus. And some of you got a special invitation that said you were matched with that. That was from Bill. Some were an open invitation. So what we have done is we're offering this event for you to focus on, look at, and review to see what you think about it. If you choose to move forward as your consultant group, we want to continue to work with you as you work with Lou. What we challenged Lou to do is to help us identify at least 3 of these type of companies or organizations or more. In a lot of cases, if we find someone like them, they won't have the same, even if they're in medical, I suspect they won't even be the same focus, the same technology focus. But we will continue to offer these up as we find these, because this is the type of thing that we see as an opportunity for our client base. With that in mind, I've spent all the time I can delaying this. We're at 15 out of 21. I'm going to turn it over to Tim and ask Tim to help us understand how this came about and to introduce our special guest today. Thank you, Tim.
Thank you, Alan, and thank you everybody for being here today. I appreciate it because I know you're all busy and with your own time and schedules. Knowledge is power, and you know me as the Tech Scout, as one of the many Tech Scouts that go to Encountering Innovation every year, and actually since the very beginning of it, Alan and I have been kind of linked at the hip. But I want to make every effort to give the tools that are needed for you to thrive in your innovation, and selfishly for defense medical applications. But also if you commercially can be vibrant that gives you one step ahead of everybody else. So this came over a conversation I had with CQuence leadership, and I was unaware of their program with which they had developed to help out businesses that maybe don't have along the breadth of, say, administrative support or whatever kind of support you need. And those sometimes cost a lot of time, effort, and funding to get done. So if you have an organization that has a national presence, that has the skill sets, has the wherewithal to help out, why not? As Alan says, we want you to have everything you possibly can to be successful. So we went down the track and kind of looked at it, discussions with Lou, and said, well, why don't we put this together today? So that's really where we're at. And on that note, I'd like to introduce Lou Castillo from CQuence. Lou, the floor is yours.
Thank you, everyone. Can you see my screen okay?
You're
yes.
Good. Well, good afternoon. It's my pleasure to introduce you to the CQuence Health Group. My name is Lou Castillo, and I'm the Managing Director of Corporate Development for CQuence Health. I've been in this business for about 37 years. I started as a software engineer and did a lot of things with shared medical systems and Cerner and eventually Siemens. And healthcare technology solutions, imaging is our sweet spot, is what I know best. And so when CQuence Health asked me to kind of participate in their group to help them identify new solutions and new technologies, you know, I think I'm a geek at heart. So it was right up my alley. Our mission at CQuence Health is really quite simple. We support healthcare companies through investment, through guidance, and through operating support. Healthcare continues to evolve and change faster and faster. You're familiar with this. Our healthcare system is under considerable stress, and unfortunately, it does not seem to be slowing down anytime soon. And many of you, like me, I'm on the tail end of the baby boomers. We have a silver tsunami of patients hitting our healthcare system in record number over the next 10 to 15 years that's going to put even further stress. So it doesn't matter whether it's AI or machine learning or telemedicine, or even some of the things that we're finding out that the healthcare system has to change because of what we learned through COVID. You have consumerism, you have value-based payment coming, you have access to quality of care. So there's quite a lot that's stressing the healthcare system. And more than 133 million Americans, or 45% of the population, have at least one chronic condition like arthritis, asthma, cancer, heart disease, depression, and so forth. So the CQuence portfolio of investments, you know, why we do what we do. We support and invest in healthcare innovators. It's simple. We are making a difference for those who want to make a difference in healthcare. We do this by investing in companies that increase efficiency in healthcare systems, decrease costs, improve quality, or even enhance the patient experience, which is a big, big trend today. At CQuence Health Group, we believe it's our duty to serve the greater healthcare community and advocate for more accessible, affordable, and innovative services and solutions that could transform the healthcare system. At CQuence, we're passionate about making a difference in healthcare and improving health outcomes. We believe that together we can deliver innovative services as a strategic advantage to enable better experiences for the patient and the provider. We can create personalized experiences by streamlining connections between patients and providers. We could drive greater patient engagement through improved technology and data-driven solutions. And lastly, we could expand access to healthcare to improve the efficiency of care for everyone. We do this by offering investment capital, strategic guidance, and operational support. What makes us different? You know, there's a lot of private equity companies, there's a lot of venture capital companies. We're not that. We're a small company that believes that there's room for us to look at and help guide small startup companies where a lot of private investors and private equity and venture capital don't even play in the small startup. If you're pre-revenue or not making money or don't have a good EBITDA balance sheet, people won't even look at you. But that's not us. We do believe in investing early. And we do believe that in some cases that requires us to get to know that management team very closely, because at that point, so early on in a solution, we're actually investing in the management team more than we are investing in the solution at times, it seems. So our commitment to you. Our commitment to you is to gain an in-depth understanding of your vision. If we decide to work with you and invest in your product, your solution, your company, we will conduct due diligence to research to validate your market, the size, the scope, and the opportunity. We'll validate your financial model and your operational model and give you guidance as part of that process. But we at CQuence, we aim to impact 1 billion patient lives by 2030. That is in our mission statement for our 10-year plan. And so we're well on our way to doing that. We go beyond funding to invest in ideas that we believe in, ideas that have the power to shape the future of healthcare. And if you have a unique idea or a service or a solution or something that positively impacts patient lives, we'd like to talk to you. That's where we get involved. Udaya Deveni, one of our CEOs of one of the companies called CEO of Ceres Health, says the CQuence team and their operational support have more than doubled my organizational capabilities. Without the added expense of outsourcing or hiring my own staff, CQuence on-demand service coupled with their strategic guidance has fueled our growth. We partnered with Ceres or invested in Ceres Health back in 2017 when they were much smaller, had a few customers and had a great idea. Now they have over 250 customers. They're addressing, they have a behavioral health model now. They're moving toward chronic disease management at a record pace. And they're able to really look at devices and do chronic care management in a very, very unique way. So I will tell you that back in 2019, then they came for a second round of funding. We invested again, we doubled down. And I look at that as just a great example of a company that we partnered with that eventually told us, you know, I have 0.5 FTE in marketing and I need more. Well, okay, so we worked with them and our marketing team at CQuence is actually doing their web design, doing their collateral, doing their branding and their brand, helping them with that. We've also have some of our IT support group that I'll talk about later, also helping them deploy laptops, deploy devices, and monitor and measure that architecture for them so that they could concentrate on what they do best, which is build a solution. So Udaya is a great example of a company that we've come together with. How do we do this? We have our CQuence partnership process, which is made up in various stages. But the thing I want to kind of point out here is it starts with a strategic plan. It starts with us going together and working with you on that. It's what we call smart money, not dumb money. We're not a company that's going to give you, give you 500,000. Give me one second. Always seems to be the case that happens, that I have a robocaller at this time. But we're not a company that's going to just give you 500,000, $1 million, $2 million, and then walk away. We're a company that wants to learn more about you and work with you after our investment and help you grow. So how do we do this? We break it down into a few stages, and I'll kind of walk you through that. So the first thing that we do is our discovery dialogue. In our discovery dialogue, we understand your vision and we identify your goals. We gain strategic insight into what you want to do, and we review both our models, and we determine if there's a compatibility between our organizations. Is this something that we both believe in? Again, we get approached by a lot of different groups, but healthcare solutions and services on the acute provider side is kind of pretty much where we like to focus. And it could be software, hardware, devices, and so it's a large area, but it's definitely in healthcare. We wouldn't get into banking or retail or things like that. The next step that we take is we look at whether it's a market fit, and we look at to validate the market size and the scope of your solution and how many people it can impact. And we evaluate whether you have with some of our counsel and our IP attorneys, what kind of intellectual property you have. And it's something that, so we determine what's called prior art. Is this brand new? Is it something that is unique and hasn't been submitted a patent before and so forth? So we help you identify those things. And then also a right fit assessment. And here's where I talk about the last bullet here, the validate cultural alignment. I think we find it very, very important that as two companies, that there is a good fit between us, that our cultures match, and that we could meet each other not only on a technology, on a sales, and on a growth side, but that we meet and there's a cultural fit. But we do identify at this stage your financing needs. We validate your financial models. We understand what kind of support services you might need, and I'll go over those in a second. And we do validate kind of your operating model. And then second to last, we do come to a point where we do a go, no-go decision. Sometimes we say no. Sometimes we either think that there's too much competition, there might be too many competitors, or it's just not unique enough. Or other times we say, this is exactly what we're looking for. There is a huge differentiator in the market, and the market's ready for something like this. And we form a relationship structure and a deal structure with you. And then lastly, we commit to developing an integrated growth plan with you that both we can help you with and that you, in order for you to succeed. What I talked about was some of the things that we could bring to the table for you. So typically with our partner companies, one of the first things we do is we have a strategy session. We use a model called Prometheus, and it's not quite a balanced scorecard, but it is a future picture strategy session where we take 2.5 to 3 days to go through with you and put together a 3 to 5 year strategic plan with you as to the type of goals and so forth that we can accomplish together. We also talk about accounting and finance. Are there services that we could offer you to help you as a small company grow on the accounting and finance side? We look at human resources, whether you need help with onboarding, hiring, recruiting, and so forth. We offer those services as well. Information technology, I talked a little bit about that, being able to deploy laptops, have an integrated infrastructure, be able to standardize your telephone system. We help with that as well as marketing. I think marketing is probably our most used service, from web redesign to campaigns to brand awareness to SSO optimization of your website. All those things we can help with. And then I'll give you another quote from Naresh Matthias. He's a CEO of DocPanel, and he's another one of our partner companies. And again, he likes to say, it's not just about the money. It's about the experience and the guiding and the support that helps us achieve our mission. That, I think, is one of the things that we try and do best. So I will tell you a little bit about some of these companies that we've partnered with in the past. So Castillo Diagnostics, Castillo is a leading medical imaging sales and service company. It helps healthcare organizations create efficiencies, improving outcomes, and lowering costs in their imaging portfolio, whether it's PET scanners, computer tomography, or MRIs, or even ultrasound. That's what Castillo delivers, both sales and service there. The Ceres Health group, which I talked about before, which Udaya is our CEO there, uses industry remote monitoring software and easy-to-use wearables to connect doctors and patients for the purpose of monitoring chronic care conditions across the continuum. From behavioral health to televisits and more, we're able to provide that service through Ceres Health. DocPanel is quite interesting. DocPanel is one of the world's first on-demand, what I would call pay-as-you-go, contract-free service offering for radiological reads. Think of it as an Uber for radiology, where if you have a scan that you've been given or a read, you can get a second opinion by a world-renowned radiologist in that specific field because they belong to our network. So you could get a second opinion and you could get subspecialty radiologists to do that. And then Microscan. Microscan provides a portable dual mode telemicroscopy, and they do digital pathology. And their instruments are low cost for the lower end of the market. They're high quality, but they're really growing by leaps and bounds right now. And then lastly, a company called Inventure. And this is just a sampling of some of the companies that we do that are in healthcare. But Inventure is disrupting what I would call the MRI contrast market with development of a product called GADX. And they have a high quality, low cost alternative to Magnavis, the competitor out there. And Inventure's medical imaging devices are reliable, low cost, and they're transforming the healthcare market as well. So, so that's just a little brief example, 10 minutes or so of what we do, the type of companies that we look for, the type of solutions and market that we're in. But we are interested in helping the little guy. We are interested in doing that. And again, my boss in particular is very fond of saying that he wants to change healthcare outcomes. That's his passion. And so we invest in veterans-owned organizations, women-owned organization, minority culture organizations, and so forth. And if it could be in the Midwest, we're a small Midwest company, and I'll tell you a little bit about CQuence. CQuence is still a family-owned business. It was founded in 2011. It's headquartered in Omaha, Nebraska. We have just over 220 employees right now. And we recruit and retain talented people with diverse backgrounds, because we do believe that a diverse team gives us better outcomes. And I think I mentioned this before. We strive a lot for our companies and our partner companies to have a cultural fit. We are a culture-first employee kind of experience company. We take that very seriously, and actually in some previous years, a few years ago, Modern Healthcare ranks best places to work in healthcare, and for 3 years in a row, we were in the top 5, and 1 year, back in, I think it was 2017, we won best place to work in the in U.S. healthcare by Modern Healthcare magazine. So that's what I have to tell you about CQuence Health. I would like to open it up for questions. If you have any questions for me, and I'll turn it over to either the chat room or feel free to unmute.
So I'm gonna start, Lou. I want to ask a question. First of all, can you tell us a little bit of how this started? Can you give us a little bit of a background on Lou? Not Lou. I'm sorry. On your founder and why this came about.
Sure. So my boss and founder is a gentleman by the name of Mike Castillo. So you might remember in the previous slide, and I'll go back to there, that one of our partner companies is called Castillo. Castillo Diagnostics was started by his father in 1984. And Mike has been in the company for over 27 years now. Did all kinds of work within Castillo. And as Castillo was growing, he decided that Castillo wasn't enough, that we wanted to have a parent organization that would have many Castillos underneath it, many Castillo-like companies underneath it. And so he started and incorporated CQuence Health. He hired a very different kind of executive leadership team to run CQuence. Brought in, like I said, I've been doing this for about 37 years. My last job was with Siemens Healthcare, where I ran their North American sales for their healthcare IT business, which was about $3.5 billion of business and a year. And I met Mike in that area. And funny story, you know, he back in 2012, 2011, he would always call asking me if I'm tired of that big company and I want to come work for something, do something fun, is what the way he used to say it. So he'd been kind of chasing me for a while. And at one point I finally decided I'd been already 30 years at Siemens, and it seemed like it was time to do something else. So I kind of took my pension from Siemens and joined CQuence. And I tell you what, it's a lot of fun in a small, kind of very agile company. He's got to go down as being one of the best bosses of all time. He's very open, very honest, tough but fair is what I like to say. But he's transformed Castillo into CQuence Health, and he puts in some of his own money and definitely some of the CQuence portfolio into investing, building this capital fund to invest in smaller companies that are just starting out. And again, his mission is to change healthcare.
Is there a company? Sure. Is there a company that's too small? What's the size range that you work with, that you're looking for?
I don't think there is a company that's too small. We partnered with DocPanel when it had 3 employees. You know, the founder, the technical innovator, and so forth. And they had an idea, and they had no revenue, no customers. But it was a great, great idea. And we said, you know what, that'll disrupt the radiology market. It's not teleradiology. It's not sending images offshore. It's getting a second opinion by industry experts, world-renowned experts in that particular pathology to give you a read. I'd spend $75 to get a second opinion on something that was crucial to a loved one or myself. And it's very disruptive right now. It's growing very well. And again, the network of radiologists that you have working with you, we could expand that to ophthalmology, to pathology. There's a lot of good ways to grow that company. I'm not sure if I answered your question, actually.
Yeah, you did. So is there Well, on that one, what was the time frame, as small as they were, from the time you met them to the time you signed the deal?
Okay, so that does vary. That does vary in some cases, whether we're taking on a majority of the first round or the angel investment, depending on whether going in for a Series A or Series B kind of round. So sometimes it depends on the company as to the process that they go through determines. If it's just what I would just say a convertible note function where we're putting in money and it's based on a certain valuation of the company early on and so forth, that could take 4 weeks to kind of set up and for us to kind of talk about. It could be a little bit more complex if they have revenue. We have to look at their customers. We have to look at the financial balance sheet and some things like that. So, and especially if there's IP. If there's IP, that usually makes it drag out a little bit. So I would say on the short end, it could be as quick as 4 weeks and typically within 3 or 4 months, we could be done and go through our due diligence to make an investment. So
I'm going to ask a question I would think most of our clients would not probably ask, and that is there can I behave in such a way, let me strike that. Can I ask a question in our negotiations that does what we see happening at the Shark Tank, where it's like, whoa, you just stepped on the landmine, off you go now. It's like, you're done. If when I'm working with you or talking to you, am I able to be transparent and work with you, or are there certain things I should pay attention to that if you ever ask, we're over, we're through?
Well, that's a great question, Alan, actually. That's very intuitive and it's a great question. I will tell you that I think one of the things that we want more than anything is integrity, transparency, and honesty. Right, for us to because it's early investment, because it's so early, there's a lot of speculation at this end of the spectrum, right? And so we see a lot of documents that show a hockey stick and how much revenue they're going to make in the next 3 years, and we look at it and go, okay, that's if everything goes perfectly and a miracle happens and everything falls into place. So we know that the hockey stick may not be quite a hockey stick and might be flatter and so forth. So but we want there to be as much transparency about your business as possible, because that's how we will. That's why, for example, with Doc Panel and with Ceres, we said, you know what, it's not growing as fast as we thought, but it is growing. You've been very honest with us from the beginning. We're going to double down and go in for another investment. Right, because you need to get you through your Series A or Series B. There are times where we say, you know what, it's not going the way we want. You weren't very transparent at the beginning, and we're not going to go in for a second investment, and we'll take our lumps on the first investment and see how it goes. But you'll have to get funding from somebody else the second time around, because after all, we do want to be fiduciary responsible with the capital that we have.
Okay. I'm going to keep asking questions. I've got a couple more. So for those of you that are itching to ask a question, either wave, unmute, or message me, but I'll keep asking to keep this thing flowing until you start asking. What about the near misses? If somebody works with you to a point to where it's like, okay, it's just not going to quite work for us, what do you do with them? Or is there an ongoing relationship? Do you try to pass them off to someone else? Or do you just go, it almost happened, good luck in Hollywood, it's off you go?
So 2 things typically happen. We go through that due diligence process that I talked to you, that process map that I kind of went through that has several stages. And for you to get to the 3rd or 4th stage with us, it means that there's something there, right? So if it does kind of fizzle out toward the end, if we can't come to some kind of financial arrangement or agreement on valuation, or for some reason we decide to say part ways, 2 things typically happen. I feel sometimes a little bit it's like American Idol, when they don't go on to the next round, as my wife and I watch that show some evenings, and I tell the company, it's not this year, but it may be next year. you know, grow a little bit more, get some things under your belt, develop some processes, and let's talk again. And again, we have examples where that has happened. We have a company, I can't mention them right now because we're under NDA and we're about to close an investment with them, but it's a pharmaceutical kind of distribution package for pharmacies that are in your Weiss grocery stores, your Kroger grocery store, Wegmans, you know, all the big grocery chains in their pharmacies, along with Rite Aid and CVS is the potential market. And it's a great dispensing automated smart AI system. And we said, and we couldn't come to terms 2 years ago, but we came to terms this year. And they developed their solution a little bit better. They got their marketing or their manufacturing costs down a little bit more, and it made more sense. So sometimes it's not now or not yet. Other times we do refer them to other places. But that is rare. It's rare because many times, and this is not, it's not being braggadocious. It's not, there are a lot of players, private equity and venture capital, that play in the 20 million, 50 million, 100 million. You know, I get people that tell me, I don't get out of bed unless I write a check for, I don't write a check under $10 million. Okay, well, we write a lot of checks for under $10 million. Our average check size when we invest is anywhere from 250,000 to 3 or 4 million. You know, on the high side, right? But we write a lot of checks that are small. So moving on from us to someplace else, there's not a lot of companies that invest this early like we do in healthcare. But we feel that we have enough expertise on our board and in our group to be able to pick more winners than losers. Not to say that we haven't picked losers, but more often than not, it's a not yet. And there's not other places for us to recommend. There are some other firms that we work with, especially in the Midwest. Prairie Capital is an example of a partner that we use quite a bit that may not only, if we feel that it's not quite the right fit or might be a little too risky, we'll bring in another partner to share in that risk.
So you talked about the average. Let me ask you another percentage. What's the percentage of people that turn you down? That go, you know, I appreciate the offer, but I think it's a no for us.
To date, I would tell you that we have had out of maybe 16 or 17 companies that we invested in over the past few years, we've probably had 3 that we could not work with that said, you know, I'm not interested. And I will tell you, all 3 of those were about the valuation, was about the, you know, and again, I don't mean to speak ill, and I'm not trying to speak ill, but, you know, when you're I get it. I'm not the entrepreneur, right? I'm not the guy who comes up with the idea. I'd like to think of myself as that, but I'm not the entrepreneur. I'm the business guy. But I'm not the entrepreneur that comes up with those ideas and do this. And when you're a founder, when you built this company, when you built this thing and you came up with this solution, you know, nobody likes to be told their baby's ugly or kind of ugly. And so when we have hard conversations with companies about the solution and how marketable it is and what, you know, the problems that we're going to have bringing it to market or the competitors and so forth, when we walk away, it's because we can't agree on the valuation that they want.
Gotcha. Well, we had somebody with their hand up. Joni is now at the top of my screen, maybe yours. Joni, welcome, and feel free to ask your question.
Yes, well, thank you for inviting me, for having us. This is a blessing to our company for sure. So my question is, what is the process actually for beginnings of a relationship or beginnings of getting to know the companies better, our products? How would we go about that?
That would be me and Tim. So I would reach out to either Tim or I to make an introduction, to give us a spec on your solution, a pitch deck of some sort. We typically do demonstrations. We go through an initial kind of process on where you're at and what kind of market it is. Like I said, if you came to us with medical, or maybe not medical, but if you came to us in retail or consumerism or something outside of healthcare, we would politely say no. But if it is in the healthcare space, And one of the other areas that we stay away from, and just because it's so saturated with so many big players, is like receivables, billing, things like on the revenue cycle management side. There's from Accenture to Deloitte to KPMG to hundreds of other boutique firms are all in that space. Unless you have some way that it magically gets done automatically in the cloud and no human has to, I mean, unless it's a really, really good solution. But either way, typically I would just reach out directly to me. The CQuence Health is on the web, sequencehealth.com. If you go into what we do and how we do it, you'll see my picture there and my number and so forth. But we could get you that information. But the first step is just to reach out to me or Tim, and we'll set up those first conversations that get to know each other.
Thank you very much. I appreciate it.
Sure.
So we've got another one who's raised their hand, Tom Anderson. Tom, welcome and feel free to ask your question.
Hi, Alan. Good to see you. Nice to meet you, Lou. You mentioned something a little bit just in that last comment about retail. My particular project is using the pharmacy as the mechanism for delivering the technologies for the medication adherence medical devices to the patients. Is that something that would be outside of that because you're looking at retail, or because we have the IP that supports further growth for a pharmacy and the technology bases that can bring?
So when a patient or an elderly person or whoever your demographic is goes to a pharmacy to check out a blood pressure cuff, a pulse oximeter, those type of things, your solution tracks adherence to that?
Yeah, actually we have a medical device, which is the medication adherence dispenser system that's for remote patients. Mm-hmm. And we also have our own remote patient monitoring complete system that does all those things for glucose. In fact, we were one of the only ones that could actually do coagulation remotely.
It's right in our sweet spot. So, okay. So that is fine. So yes.
Okay. I did fill out one of your contact forms on your webpage the other day, so you may have part of my information there.
Okay. Thank you.
So another question I have, Lou, while we're waiting, is what percentage, is there a certain percentage or equity position that your company takes with someone with their IP? Do you come up with is there a model, or how do you come up with that, or is that all over the board? Yeah,
I'm going to have to say it's all over the board. You know, there are times that somebody comes to us and says, similar to Shark Tank, I want 300,000 for 20% of my company, and here's the rules of engagement and so forth. I rarely find a founder that's a founder or young company that says, I want you to take 51% of the company. You know, so typically it doesn't go, you know, quickly that way. There are times though, over time, where somebody will say, okay, you have 20%. I'd like to give you another 5% at this rate based on this valuation and so forth. So there could be multiple times that we invest over time, but it is kind of all over the place, that depending on the round and how much capital they need and how much of that we can provide. So if they come in at, for example, like at a $5 million round, we may bring in a partner and do 2.5 and 2.5, or we may say, you know what, based on our appetite today, or because again, we're also doing this with many companies, right? We may say, well, out of all the companies, I've got 4 or 5 that I like, so I'm going to take my $2.5 million or $5 million that I want to spend this quarter or this year, and split it out 500,000. So sometimes it depends on our working capital and how much we have.
So do you, what's typical in the bringing in partners or telling them, we'll be glad to do part of this, but you need to go find 3 others, or you need to go find the balance. You're wanting 3 million, we're up for 500,000. Go find 2.5 million and we're there.
That happens quite a lot, and many times, more often than not, to be honest, Alan, through angel investment, through other vehicles, we typically get called in and say, I have 3 of the 5 million, I need 2 million left. You know, can you come in for that? And we may say, based on what we see, I'm only going to do 1 million. You need to figure out the other million, or we'll bring in another partner to help you close that gap, and so forth. But typically we get called in when you already have some of it, but you're looking for, another partner to fill out the rest.
Okay, so you're typically not calling in other partners?
No, that's not what I'm saying at all. We do at times, but typically I'm just saying on averages, we're usually getting called in as opposed to us calling in other partners.
Got you. So let me ask maybe another clarifying question on that. When they need other funding, is it typical for you to go looking for the other folks to come in, or is it more, is there a percentage that we're good, but we're not everything? What would you say the percentage that they got to keep looking on their own?
I would say 90%.
Okay. I think that helps.
I mean, at the end of the day, at the end of the day, it's their business, it's their company, and they're working with many different banks or private equity or things like that. Part of the hard part about building a company is raising capital.
So what's the percentage of clients? Is there a small enough number that causes you that if you're interest that you're going, yeah, we're good for the whole amount? Is there a small enough number that you go in for whatever the whole amount is needed?
But again, and I'm really not trying to dodge the question here, because I really want to be as transparent as possible. If you asked me in January, I would tell you that we could probably take on $5 to $6 million at a time. After we've made investments in the first quarter, and I know that we have 2 more investments that were already on schedule, I may tell you that number is slightly lower now for the rest of the year. So it depends on when you catch me in the cycle, and
Sure.
the capital that we've shown off from some of the other businesses and our other investments.
Okay, so we've got a question. I hope I haven't missed any of the others. Do you invest in convertible notes or safes? Did I get that right?
We definitely do convertible notes, and again, we're very flexible in the way this works, because sometimes they just say, listen, I don't want to give you options, I don't want to give you stock, I just want to do a convertible note. It's at 8%. In 2 years it matures, and is that good enough for you? And we can negotiate on whether 8% is good or not, or if you do a Series A, can we convert that to part of the series? There's all kinds of things that we work out with companies in order to kind of protect both of us. But yes, we're very flexible in that.
Okay, so now I've got or PPMs. I'm showing my ignorance.
Not so much PPMs, or not recently at least.
Okay.
One of the other things that we'll do that companies find effective as well, we may make, like, for example, $1 million investment. And then the company comes to us and says, I really need help with accounting and marketing. And if you could help me, hire these 2 positions, I need some onboarding and recruiting help. Okay, well, we'll come in. And they'll say, but I don't have the money to pay you. Okay, well, that's a little bit of a problem. So our services, we don't do a service with a markup, because you're an investment company that we want to succeed, and because we've invested, right? We give you kind of like a cost plus. It's a very reasonable price for services in the market, very different than what you could find in the market. But many times we'll work out something. We just recently did this with one of our companies where they said, I want to outsource all marketing to you. I want you to do it. We think it's worth this much. I only have this much. How about if you take the remainder in stock, in equity? Okay, we could do that. Right. And so sometimes we work out arrangements like that. Again, we can be very flexible.
So how often are you participating with your personnel then in the company for the growth of the company?
I hope it's 100% of the time. It doesn't always turn out to be 100% of the time. But again, we look at that. There's an old adage in this business called smart money and dumb money. And I never want to be dumb money. I never want to just give you money and say, hey, let me know how you do. Yeah. So I want to be involved either through the strategic planning. In some cases, depending on the size and how much equity we cut, will require a board seat, and we will sit on your board as well. So it all depends. In order to
Any other questions that if I'm missing anyone, trying to pay attention to everyone? So Lou, I think we've told you that we do with our Encountering Innovation, we do the quad chart, information paper, and a pitch deck that the Tech Scouts like, as well as a poster board. And our poster board that our clients do, we call that the public document. As we go forward, as we continue to do this in a virtual environment, we're calling the poster board, instead of just the poster board, it's actually the public document. Would you be good with, would that be a good starting place? Because everyone knows, I think everyone on here knows what their quad chart, their pitch, and their info paper and their pitch deck. Would that be a good place to start with you?
Yeah, I think so. I want to know more about this poster board, but I think so. Okay.
I know in the poster board, as we go forward, we do what we call bluffs. That's an invention by the Tech Scouts, bottom line up front. The 30-second elevator pitch, if you will, very short, very brief. The poster board is intended to be the follow-up from that bluff. We are working to where we can, I don't know if we're going to get this done this year or not. I keep wishing, and then the world keeps spinning, you know, but we want to have the poster board as a public request document, to where after you see the bluffs online, you like something, you go, I'd like to know more about this company, and you click on it and you download your email, and then we give you the bluff because it's a public document, but we know who got it. We're not quite there. That's in our mind, but that would be something you'd be comfortable with. If as we show you, we'll be glad to follow up with the bluff and the poster board for you as well.
Okay. All right. That's a good.